Is it the right time to invest in this company? Or maybe it would be better to invest in its main competitor or even the S&P 500. Let's analyze which is the better investment of the three. For growth, what you see here is the stock with the highest projected earnings growth for the next 5 years. We want to figure out which of the three is growing its earnings the fastest. Note here the S&P 500 is based on the average of its 10 largest stock components. Second, we look at P/E ratio. Which stock has the least amount of speculation with a lower P/E ratio? We prefer a lower ratio. The most points are given to the lower speculated stock. For the 200-day moving average, what you see here is the stock that is trading lower than its 200-day moving average the most. We want to figure out which stock is furthest below what it has been normally trading at. This is a sign of good value. For returns, what you see here is the ROA, ROE, and ROI of the three stocks. We want to figure out which stock is using its assets, cash, and investments most efficiently. The greater the overall return, the more efficient the stock's business. Fifth, we look at dividends. Which stock pays you the most to hold their shares? We prefer a higher yield. The most points are awarded to the stock that pays you the most. Sixth, we look at the short float. Which stock are investors and traders most bearish in? We prefer a stock that's least shorted. The most points are given to the least shorted stock. Let's then look at profit margins. Which stock generates the most profits from its business? More points are given to the more profitable stock. For the analysts, what you see here is the stock that most Wall Street analysts favor the most. We want to figure out what the average consensus others think of the stock. A grade of 1 is the best, indicating a strong buy. A grade of 5 is the worst, indicating a strong sell. So after going through all our business metrics, what you see here is the total score for all three stocks. The higher the score, the better the business of the three. If the company has a higher point total than the S&P 500, it's a market beat, and that's the preferred outcome. Before we get to the fair price, join my Patreon. You'll get access to every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. Here's the current stock price, along with the company's fair price, so we can figure things out quickly. The big percentage number on the screen is basically how undervalued or overvalued the stock is relative to its fair price. The more positive the percentage, the more undervalued the stock is right now. So we've looked at the business and the fair price of the company. But other than that, sometimes you just want to know how the stock has performed over a number of years against its industry and that of the S&P 500. Sometimes you just want to know if the company has done well enough to invest in based on its past performance. Don't forget to subscribe for more. Invest wisely, and as always, take care of your money.